We're going to give you almost all of your money back. Okay. You get to stay in the deal. We're going to keep sending you checks, and then we're going to hold it another 5 years, and then we're going to sell it, and then you're going to like quadruple your money. Like it's the coolest thing ever.
Welcome to the RealPropPro podcast, where strategy, innovation, and wealth converge to redefine real estate investing.
Hello, and welcome to the RealPropPro podcast. I'm your host, Ian Dietler, Sacramento-based real estate investor. This show is about unlocking freedom through real estate by hearing from people who are living it. At RealPropPro, we train people to take action with tax deed, tax lien investing, fix and flips, creative financing, and so much more. If you want to build your income and learn how to do real deals, please visit RealPropPro.com. Today's guest is Stephen Lee Thomas, a multifamily investor, podcast host, and mentor who helps people escape the W-2 grind and live life on their own terms. He teaches others how to think like an investor, scale into apartment ownerships, and reclaim their time through systems and smart investing. Stephen, welcome to the show.
Ian, thanks for having me, man. It's nice to be here.
Thanks for coming on the show. We really appreciate it. We, can't wait to talk to you about all these multifamily deals you have been doing and all the stuff that you're teaching your students. So again, thank you so much for coming on the show. Let's start with some questions about kind of where you were born and where you grew up.
Yeah, so I live here in California, not too far south of you. I grew up in a town called Visalia. I think it's a little over 100,000 people now. It was smaller than that when I was born there. It was a type of town you pretty much knew most people's names. I remember leaving when I went to college, and when I came back, showing up at the mall or something, and people remembered me. It was always, you go back and run into lots of people. So I grew up in Visalia, and just in a normal, normal neighborhood. My dad, neither of my parents had a college degree when I was born. My dad went back to school, got his AA. They worked real hard for a very long time, and I watched them do that. And I always thought to myself, I don't know that I want to do that. We always had everything that we needed, had a great life growing up. And I was always told, go to school, get a job, and retire. And I remember one time I was going to junior college, but I wasn't really going. I mean, I was enrolled, and I was living at my parents' house. I remember my mom opened the door. She's like, "You need to get your ass out of bed. You need to go to college, or you need to go to school." And I was like, "Ugh." So I did. I went to school. I got the degree. It took me about twice as long as it should have. I have about twice as many units as I needed to graduate. But eventually I did it. Eventually I got into a full-time job, and then eventually I quit the full-time job, and all I do now is real estate. And that's where I'm at now. And that's why I'm talking to you.
Awesome. I love that story. I had similar experiences with my junior college experience. Mom yelled at me, get out of the house, go to school, all that stuff. And definitely took me twice as long as it should have to get an associate's degree. So same college path there. I love it. I also tell people that I had dreams to become an electrical engineer. That was until I took calculus, and they're like, there's about 4 more years of this to get your electrical engineering degree. And I said, I am done with this. So
Calculus was when I was done with math. I'm like, nah, I'm good. Yes. I don't think I finished that semester of calculus.
Yeah, I got a C, and I was extremely happy to get. That's the most happy I've ever been to get a C in my whole life was for calculus.
I believe it.
Yeah. So what kind of work were you doing outside of college before you started to get into real estate?
I think my very first job, my mom, worked in medical offices. She was basically a medical assistant, office manager. And so my first job was cleaning offices, cleaning doctors' offices. So my mom worked in this little like strip, not a strip mall, but like this strip of doctors' offices. And so I was janitor. Was my first job. Um, and then, got a job working at a pizza place doing pizza deliveries, worked my way up to manager. And then from there, I left and went to work at a burger joint called Red Robin. And I started as like a host and a server. And I went and I told the managers, I said, I want to be a bartender. And that's what I want to do. I want to be a bartender. But intentionally, I wanted to be a bartender because I wanted to talk to people. I wanted to sit and I wanted to just get an opportunity to talk to people and understand why they were at where they were in their life. Like that was what I wanted to do. So anyways, eventually I was able to work my way up to a bartender. It was great because I asked so many people, what do you do? And how did you end up in this position? And like 100% of the people are like, well, I never really thought I was going to do this, but life kind of happened to me. And I still was like, that does not sound cool. But I get it. Right? So I'm a little bit older at this time. And so I from there as a bartender, then I went over to the university. So I was in junior college. I went to the university working on my 4-year or my 8-year, whatever you want to call it. And was still bartending, working nightclubs. And so still bartending, but I loved it because I got to interact with people. I just loved the people part of it. And then I graduated college and I was like, well, shit, I have to get a real job now. I gotta go like work this 40 hours a week. Like that's not cool. But I was like, well, I mean, and so my first job out of college, I was making as much money as I was bartending. I was like, so it was rough, dude. I went to school for a very long time to make the same amount of money that I was bartending. I was like, oh man, this is rough. But it was always what I had been told to do, and eventually started working my way up. And then went and worked in IT. Started working for a software company, so I worked in IT, and then from there I worked in a healthcare company in IT and operations. So I have a background. I worked in IT and operations for probably at least 15 years, if not longer, 15, 17 years in IT and operations. But I was able, I leverage a lot of that every day. I combine a lot of my people skills, the IT skills and the operational skills, and I fold all that into real estate.
Yeah, absolutely. I'd like to talk a lot about that once we kind of get more along that journey, because I think it's great that you've been developing these people skills, trying to talk to people, figure out what makes them tick. And then at the same time, you're kind of getting some of the systems and processes down for making a successful company. So, what first got you wanting to get into real estate? Was there like a spark, or was there a moment, or was there any type of influence? Like, what made you realize, hey, I should start to look into this real estate stuff?
I think I was born that way. Um, as long as back as I can remember, I always wanted to be an entrepreneur. I always wanted to be a business owner. And growing up, I watched it. I was never around it, but what I always knew about, what I always heard about was single family rentals, kind of a thing. After my wife and I had gotten married, we were working real jobs. We started to have some cash. That's when I was like, whoa, let's get into real estate. And started looking into the single family, whether it was rentals or flips, and started doing a lot of research that way. And that's how I got started. It's just always been in me. It's always something I wanted to do. And when I got to the point where I had enough cash, I was like, now I'm going to do something with it. That's how I got started in it.
Okay, so what did your first deal look like? Did you first start off with single family homes?
I did. Our first investment was a flip house hack kind of a thing. It was a house that was just shy of 100 years old, and it was a place my wife and I first moved in together. We had lived in that area in like a fourplex, little flat up there in a fourplex. We're like, well, let's move back down there. We like the community, we like the area. We'll be part of the revitalization. We'll flip this house and then we'll either sell it or we'll rent it. At that same time, I had a 2.5 going on 3-year-old, and then my wife got pregnant. We had sold our other house and we were living with my in-laws, and that lasted like 6 months, and that was a nightmare because we had 2 cats with us at the same time and a baby. So we had a little kid and one on the way, and we're just chasing contractors, and it just sucked. And I remember like, we got to get out of this house. Your in-laws are great, but we got to get out of here. Anyways, getting into this house, and so then we lived in it for a few more years, and took us a while to get it finished. When we went to sell that house, the real estate agent, we decided we're not going to keep it as a rental. Let's just, flip it and get the money from it. The real estate agent told us, man, you guys did a great job, but you over improved the house. I was like, what? He said, yeah. He said, nobody else in the neighborhood fixed up their house as nice as you have. So you're not going to get as much money as you want to get, but you're going to get, pretty good money. And so that's when I was like, nah, man, I think I'm cool. Like, I'm not really interested in this. And so at that point, I'd already started learning about the apartment investing. I'd already started being a passive investor, but that was kind of like the icing on the cake for me. I had felt really burnt from just trying to get this thing done. And then when we finally went to sell it, I had done too much, which was a tough pill to swallow. But here's the flip side of it, Ian, was what I learned about multifamily was you're buying and selling businesses, so the valuation is different. With single family homes, you have comps in the neighborhood, and multifamily, it's a business. And so it's really numbers based. And the more I can improve it, dollar for dollar, like, the opportunity's there. And that's when it became a much easier decision for me. Still a long journey, but that's when it became an easier decision.
So was that first single family home, was that the only home that you tried to fix or tried to
It was.
fix it? Yeah, that was it.
That was it. That was it.
Okay.
That was kind of like my one and done. It was really from there. I'd already done some passive investing in apartments, and I was like, nope, dude, I'm good. I'm full on going after larger multifamily deals. There's no reason for me to hang out in this space. If I don't enjoy it, then I'm not going to do it.
Okay, so how did that develop? How did you get into your first multifamily? What did that deal look like? How many units was it? Did you have a coach? Kind of walk us through that very first multifamily deal.
Yeah, so I had around that same time, and we had already bought this house for flipping. And around that same time, I had heard about multifamily investing. So I went out, long story short, joined a program. And at that point, I was gonna be all in, but I was just so busy with the family. My work was extremely busy. We were growing very rapidly. We were going from like a Fortune 458 when I left a year ago. They were Fortune 20 or Fortune 25. So just like crazy growth. I was like, I joined this program. My full intention at that point was like, I'm going to go into being the general partner, the active role, but I was just so busy. Started doing the passive investing. What that did is it gave me the opportunity to learn and earn and build relationships with a lot of other people. And it was those relationships and what I had been learning along the way that got me into my first deal. So, say it a little bit different. I didn't do a multifamily deal on my own. I did it with other people who had some experience and people I had built some relationships with. And it was just showing up continually and being in that environment because it's like anything new. If you're gonna do it, my advice is commit. And when you commit, all of a sudden you're next to people who are doing it, and you can, move a lot quicker at that point. So I built these relationships. So my first deal was 184 units, just shy of $29 million. And We're in the process right now. We still have that one. We got some other deals that we've had and gone full cycle, but we still have that one right now. And operationally, it's doing pretty well. So my first deal, I'd only done one very rough flip, which took a while, but my first apartment deal was a very large multifamily deal, and it was me and 3 other partners that did that.
That's a pretty big deal to first start out the gate with that. You'd kind of mentioned that the first deal, you kind of took more of a passive approach to invest into that deal. Can you kind of can you explain to the listeners what you mean by that and kind of compare that to more of an active role in apartment investing?
Yeah, absolutely. So it's a really good question. In the world of apartment investing, so a lot of people don't even know about apartment investing. They're familiar with wholesaling, flipping, short-term rentals, single family rentals, or maybe you buy a duplex or a fourplex. But there's a way you can go buy large multifamily deals. You get a commercial loan, but the way there is a loan that comes in, and you get 70% of the value. You get that from the bank. The sale prices comes in from the bank, but then you have to close the gap. So you might have to raise 10, 12, 15 million dollars. And I say raise. So where does that money come from? So what I did is I met people who were going and doing these deals, and they said, hey, we've got this deal. Would you be interested in investing? All you got to do is invest. You don't have to do anything else. We're just going to send you money. And I was like, what? And they're like, yeah, we're just going to send you money. Just invest. We're going to send you money. I was like, okay. So I did. And that's, that was when my kids were little. I wasn't sleeping through the night. And that's when I was, changing diapers and getting mailbox money. I had invested in, my first deal was a deal in San Antonio. And then as a passive investor, and I invested in a portfolio of deals in Houston as a passive investor, and then a couple other deals. And so, but all of that was, I didn't have to do anything other than I educated myself. So I knew enough to say, yep, I feel it's a good deal or not. I took the time to learn who the operators were. Can they execute on this or not? But my involvement as a passive investor was not much. I invested money, I got checks, and I jumped on some webinars and I read some emails. That was it. So what's great about that is there's a whole world of investments out there. There's these alternative investments. So if somebody wants to, they can invest passively in apartment deals. The other side of that is and that's called a limited partner. The other side of that is being a general partner. And a general partner is they go out and they build relationships with brokers. Then they start looking at deals and they underwrite these deals. They learn how to submit offers on deals. And then they build relationships with potential investors who just want to invest passively. Like I was in corporate America. I was a perfect person, making good money, very busy, didn't have the time to do it. So that's why I invested. So as a general partner, you're doing all those things. And then when you own the property, which is generally 3 to 5 years, you're doing the asset management. So it's general partner is very active. You're doing the work. Limited partner is very inactive. That's the best way to describe it. So you can choose to do either way. The returns are really good either way. So that's the difference between a limited partner and a general partner when it comes to multifamily or apartment investing.
Great explanation. Like you said, a lot of people don't know or understand the apartment investing world. So that's kind of one of the goals of this show, is to highlight some of the different possibilities out there. We've had multiple guests on here who've talked about apartment investing and commercial residential investing. I really like highlighting it because it is so powerful, and you're able to create so much wealth so quickly with these type of vehicles. Earlier, you were talking about how you'd flipped your house. I would assume you probably made maybe $100,000 or less.
Yeah, it was less than that. It was
so you can spend all of your time and all your effort and stress, and like you said, chasing down contractors to try to flip one house. Let's say you get that one done in a year, and if you were to make, say for instance, $65,000, $75,000 that year in flipping, that's a pretty good payday, especially if you have a daytime job. But what I try to get people to start to think about is, what if you took that same effort, energy, and put it into apartment investing and purchased, a 30 unit, and after that 1 year of improvements, now all of a sudden this thing has gone up by 1 million, 1.5 million in value, and that same year that you spent flipping that house, you made 60,000, and over here on the apartment you've made 1 million. So I mean, just kind of looking at the different side of how much more money can be made. Can you talk a little bit about that, about what type of paydays these types of deals can really actually pay off?
Sure. So the easiest explanation is on the passive investor side, and we'll start there. And then I'll jump over to the general partnership side. And I was having this conversation with someone earlier, educating them on being a passive investor, and they decided they were going to move forward with it, which is great. And there's a reason why. So they're a busy professional, and they're like, actually sounds like a pretty good deal. Like, you mean I don't have to do the work, and I can make this money, and I can pay less in taxes on the money that I'm going to make? And I was like, yeah, all that's true. So, as a limited partner, passive investor in an apartment deal, the way we structure our deals, our goal is to get you at least an 80% return on your investment over 5 years. So, to simplify that a little bit, that would be a 16% average annual return. If you invested $100,000 at the end of 5 years, you're going to get back your initial $100,000 plus $80,000. The stock market on average will go at 10%. So it's outperforming the stock market, and then when you get around that 15, 16%, you're able to double your money a lot quicker. So there's that piece of it. So that's our goal in 5 years. We can generally do that in like 2.5, 3 years. We can hit this mark where we're giving you, 80% return within every 2.5 years. So that's like a 36% average annual return, which is really good. So that's what the return looks like. Here's another cool point about it is, unlike the stock market, the only way I can really get money out of the stock market is if I had to go sell my stocks. Okay, so they can appreciate in value. It's great. I can look at it on my computer. Oh my gosh, I've made all this money. Well, not really. The value's gone up, but the only way I can get that money is I've got to sell that stock. Whereas with real estate, guess what? Someone's paying you every month. You don't have to sell anything, and someone's paying you every month. So you have cash flow that comes through. Which is nice. And you have appreciation, and you probably talked about this on your show before, but you have forced appreciation. So I can go in and I can make an improvements, and I can take a property that was worth $5 million, and I can now make it worth $7-8 million. So not only are you getting cash flow, but you're letting me do work on it to increase the value by millions of dollars. And so you're going to get paid while we own it, and you're going to get a really fat payday when we sell it. Then the other really cool part about it is you get to leverage something called depreciation. We are buying and selling businesses, and it's real estate. Okay. So because of that, there's depreciation. What that means is, as a limited partner, you get a tax document called a K-1, and you are going to get sometimes a negative number on paper, even though you're getting money. So my CPA has always said, I never want to see your checks. I never want to see how much money is going into your account. I just want to see your K-1 document. So because of the depreciation, those losses, I pay way less in taxes on the money that I make through my investments than I do through, 401k or Roth IRA, whatever it is, through that kind of stuff. Because I pay myself first in that case, and then I pay whatever minimum amount in taxes has to be done. So there's multiple layers to it. So that's, as a passive investor, you can basically double your money every 3 to 5 years. That's it. On the general partnership side, if you want to be active, I don't know, like 3 to 5 times that amount, but there's more work. So one is, I can keep my corporate job. I can make all kinds of great money. I can grow my wealth faster than what my company's offering me, and I worked for a place that didn't even match. They always said they would, but they never did. Um, it's nice to be able to have an investment that gives you those types of returns, and it's not directly tied to the stock market. So the last example I'll give you is, one of the things that's always been hard for me about the stock market is I don't know what's going to happen between the morning and the afternoon with the value of my money in the stock market. Somebody like the president or Elon Musk can do a tweet or an X, whatever it's called now, and the value could go up or it could go down in the single day, but it does not have the impact on rental income. Doesn't have the impact. So there's a pretty good overview. Multiple paydays along the way for years, as long as you own the asset.
Can you explain a little bit more of how the active side, right, the general partner, how much money could they make if the deal works out like super well for, like, let's just say a 30 unit apartment complex? I mean, what type of returns could they expect?
Millions. Yeah, that's the short answer, is millions. And it's kind of tough to factor because you start getting into, well, how many people you're partnering with, and how do you split the pie up? But what I can tell you, I mean, I look at deals all the time. So there's like a $4 million deal that we were looking at earlier, and we decided not to put an offer on it. Offers are due today. We decided not to. But when we did the numbers to make it work, there was a $2 million upside on that deal within 5 years. There was, so we wouldn't have put 4 million in because right, we would have got a loan for it, but there was $2 million in that deal. There was another smaller 24 unit deal we were looking at earlier this year, and that would have been our money that we would have put in as a general partnership. Would have been, I don't know, like $100,000. We would have raised some capital, and at the end of it, there would have been like a $1.5 million paycheck. Like there's this huge disproportional upside to it. You're doing a lot of work. You're putting a lot of work. And so as a general partner, there's basically 3 paydays. When you close the deal, you get an acquisition fee. It could be 1 to maybe 5%. The acquisition fee, 1 to 5% of the purchase price. The acquisition fee is, you work hard for a long time before you find a deal, before you get an offer accepted. And when I find the deal, I got to put money down on it. I got to pay the fees. I got to do all the stuff. So I have to have a lot of cash to put into it. I will pay myself back with the capital raise, but there's a lot of risk involved. So I give myself an acquisition fee, payday number 1. Then I do, because I'm running it, I get the asset management. So anytime I do a distribution to the investors, I pay myself. I get asset management fees. Plus, I generally invest in the deal. So then I also get payment from that. So I get an asset management fee, then I get paid as an investor. And then when I sell the deal, I pay myself as a general partner, and I pay myself as a limited partner. So actually, if we stack all it up, there's 5 paydays. There's a lot of different ways you get paid as a general partner. A lot. And that's what's really appealing about it. But I do have to like put the footnote in it. I talk to a lot of people about, and they're like, oh, it's apartment investing, it's passive. And if you're a general partner, no, it's not. One deal does not mean you're working 60 hours a week. That's not what I'm saying. You can easily do 4 or 5 deals and keep your life normal 40 hours a week. If you're doing 4 or 5 deals, you're making a shit ton of money. I'm not gonna lie, like, you're making good money, but it's not passive. Like, you have to make sure that the property management company gets the support they need. You have to make sure there's investor communication. Like, there's a lot that happens. Every week you're meeting with the property management company. If there's issues, you got to solve it. You're working with insurance companies. There's fires at the properties. There's things that happen. So you've just got to be able to deal with that. So there is a pretty big reward. It's not 100% passive though. Just footnote, not 100% passive, but it is a fun path to be on.
Yeah. One thing too that's really cool about investing in apartments is once you kind of get, so if the property needs improvements, or it needs some of the tenants need to be updated or replaced, basically improve the tenants and the property, at some point it gets stabilized. And then at that point, the investor is able to refinance and pull some cash out. Can you talk about that process and make sure to explain that that's tax-free money?
Yeah. How detailed do you want me to get on that explanation? So,
Just
so
what that process
yeah,
looks like
yeah,
and what kind of payday a person could expect on that.
yeah. So you can definitely refinance it, and so the way we handle it is we will go to our investors and we'll say, all right, guys, here's the position that we're in. We've been able to implement our business plan. The market conditions are good. We can A, sell the property, B, do nothing and just get the cash flow out of it, or C, we could refinance it. And in the event that we refinance, we take a look at it. And in order to refinance in commercial real estate, there is what's called a debt service coverage ratio. And generally, on the refinance on a traditional agency loan, they want a DSCR of at least 1.25 or better. And so what that means is 125%. So you've got to have enough, you're making enough that you can pay your mortgage and then some. So what you do is, and this is the coolest thing about it. So they look at what the property is valued at. And they do that by evaluating your cash flow. So if the market's really good and you have really good net operating income and you've got millions of dollars of equity you put into this, you have millions of dollars of equity you can take out. So here's when it gets really cool is you do a cash out refinance and give investors almost all of their money back and hold the property and cash flow it. So then you're almost like infinite returns. And that's like this magical moment. And there was about 4 or 5 years ago, that was much more prevalent in the space. The market shifted right now, so we're in a fantastic spot to buy. And then I think in another 4 years, we'll be in another fantastic spot to refinance and say, guess what we're going to do? We're going to give you almost all of your money back. Okay. You get to stay in the deal. We're going to keep sending you checks, and then we're going to hold it another 5 years, and then we're going to sell it, and then you're going to like quadruple your money. Like it's the coolest thing ever. So, yeah, we can, there is a lot of, and this is where I say how much detail you want me to get into. So there's a lot of, you have to understand cap rates and what's going on in the market. And you have to understand the DSCR, and you've got to understand interest rates. And when you have a good intersection of all of those things, that's the right moment to refinance. So does it always happen? No. Can you do it? Absolutely. And you make a ton of money doing that. And you, like I said, you get like almost an infinite return on your investment. And that's like the best scenario you can get.
That's great stuff. I love hearing about all these magical moments in multifamily. You'd kind of just mentioned just now in your response that um, sometimes it makes sense to do it and sometimes it doesn't. Um, what are the things that line up to where you probably won't want to do a refinance?
Yeah. So in market cycles, there is an upside and there's a downside. In any market cycle, you could buy a property. We'll just use round numbers. I can buy it for 10 million. If I don't do anything to it, everything stays the same, but there's more demand for the property. Because there's more demand, now it's worth 12, 13 million. In that case, it makes sense to refinance because I have equity in the deal. I can pull out that $2-3 million, just pull it out. Boom, it's mine because there's more demand. It gets assessed. That's what's going on. There are times though that when you buy at the top of the market, and I bought it at 10 million and now it's only worth 8 million. Operationally, it's fine. I can still pay my bills. It's not a problem. But if I sell it right now, I actually have to sell it for a loss because I'm at the bottom of the cycle. At that time, you don't want to refinance. So you when you're in it long enough, you start to understand the market cycles, and it's not like it's always a 3-year cycle or a 5-year cycle, um, but but there's moments. So and then that demand translates into a industry term called cap rate. So if and that's like an inverse of a like an equity multiple. So if the cap rate goes down, there's more demand in the market. Generally, that's driven by lower interest rates is a big driver there, or supply and demand. There's just not a lot of apartments available. If that's the case, then it's a seller's market. When it's a seller's market, it's a good time to refinance. When it's a buyer's market, it's generally not as good as a time to refinance, because you can refinance to change your debt at any time. Like, well, I'm going to refinance because I want to lock in a certain interest rate. Maybe it's a neutral refinance. You're not taking any money out. You're not really putting any money in, but I have this variable rate and I want to just lock it in a flat rate. Sometimes you have to refinance and it's a cash in. Because of that, I've gone down in value. Maybe I had a variable interest rate and I'm just tired of dealing with this storm. We're going to cash in refinance. So there, I just like to paint the picture that there's both sides. I think it's fair to say there's a lot of rewards. What's important is, and this is for those people who are passive investors, um, you want to work with somebody who's navigated some of that before, because when it comes up, it can be a little choppy. And if you have no clue what's going on, it's a really good opportunity to lose your ass. If you've been through it before, you can see through that a little bit easier. And you can navigate a lot.
Yeah, I'm glad you kind of mentioned that because I kind of want to get a little bit into the other side of apartment investing, right? We've kind of really been highlighting the amazing things and the cash flow and the wins and all that stuff like that. But I've also kind of seen some of the darker side of investing in commercial, residential, multifamily investing. I feel like kind of when the market has shifted recently, right? I feel like a lot of people were just kind of being very loose with their underwriting, meaning that they were just kind of, running numbers like rates were going to always stay the same. I think it kind of changed, and you could, tell me if you agree with this. I feel like it changed about a year or two ago to where rates had shot up really quickly, almost overnight. And I feel like that left a lot of people in a very bad position. Can you kind of talk about that moment when the market shifted really quickly and how it negatively affected some of these syndicators and some of these apartment investors?
It was March of 2022. That was the moment. That was when the Fed started raising interest rates. And so what led up to that moment was the market was hot. Because of COVID, the Fed had dropped interest rates significantly. Debt was cheap, but it was variable interest rates. And the market started pricing in very inexpensive debt based on very inexpensive debt based on variable interest rates. So the only way you get deals was to pay a lot for them, but the debt was cheap. Then there's a huge pivot by the Fed, and all of those loans were based on what's called the SOFR, secured overnight financing rate. And then it went up crazy, like you said, the most and fastest it's ever gone up in history. So the variable rates caused anybody that had gotten to a deal, they're just bleeding out in these payments and interest. And where people really, really, really got upside down on it was there's this thing called a rate cap. What that is, it's an insurance policy for interest rate movement. And it's basically a ceiling. So what I can do is I can buy a variable rate loan. And then I can go buy on the market, I can go buy this insurance policy that says if my interest rate goes up, once it hits this ceiling, I'm not paying for it anymore. This insurance comes in and they pay it. And lenders kind of did this to themselves. They had it in their documentation, but they weren't enforcing it. So it'd say, you got to go get a rate cap. But we're not going to ask if you got it. So a lot of people actually got into these deals, didn't have a rate cap. And so when interest rates shot up, they had no protection. And they're just like, what do we do? And these are people that just had to walk away from deals. They literally had to walk away from deals. So what that caused is a devaluation of apartment deals. There was less demand for it. The people that bought it high, they didn't want to sell it low because they're losing money. And so that's where we had this shift. So to your point, yes, it was last couple of years, 2-3 years ago, we had this shift, and now we're basically in the bottom of that. So if you look at like loan maturities and such, we're kind of in the bottom of that. And so deals are very much at a discount compared to what they were 3 years ago. So if you can get into a deal, and this is like a nationwide thing. This is just not market specific. It's the macroeconomics of the United States really is what led into this. And so if you can get into a deal now, fantastic. People that are selling deals now, they've had some issues and they've been struggling. It hasn't been easy. So I'll tell you, so like we were getting into this deal, and it was around that time, end of 21, beginning of 2022. We saw the writing on the wall. We're like, we need to get this rate cap. And when we got the deal under contract in December of 2021, the rate cap was, I don't know, priced at about 40,000. When we closed the deal in March, it was, I don't know, like 250,000. It's like, that's how much it went up. In a couple months after that, that same thing was valued at over $1 million, because then at that point, the analysts were like, dude, these interest rates are not going to come down. So we got a pretty good discount on our insurance policy for the rate cap. But that's really saved us. But there's a lot of people who really just got the short end of it and just kind of lost their asses and had to foreclose on it. And it's created some turmoil that we're just about through that. And interest rates are pretty stabilized. The Fed is signaling that they're going to slowly start lowering interest rates, which helps out on that stance. And then you don't ever know. My crystal ball, I've learned, is very cloudy.
Yeah.
So I don't know what shit show is going to happen and where in the world it's going to have an impact, like
Yeah.
COVID. But overall, my goal is like buy as much as I can right now, while it's as cheap as it is, just because of, like I said, where we're at in the cycle.
To kind of take a step back, just because I really want to highlight the risk here, right? Like, again, this isn't all, rainbows and unicorns, and it's not all just winning, right? Can you talk about what happens to those people that thought they were just making a passive investment, right? Let's say they invested $100,000 into one of these deals and it failed, and you'd mentioned it just defaults or like goes back to the bank or whatever, right? What happens to their money? I mean, if you were a passive investor and your syndicator completely failed, what happened to all that 100,000 you invested?
You've lost it. At that point, you've lost it. That's the short answer. Yeah, really, truly, at that point, you've lost it. Yeah, there's really no other explanation to it.
Yeah.
There's things you can do with the bank, like you try to do loan modifications with the bank. You can try to short sale. Things you can do to try to salvage and get people some of their money back.
Yeah.
But I do know people who invested in deals, and to be completely honest, didn't get any money back out of it.
Yeah, I've also heard that sometimes the syndicator can go back to the investors and say, "Hey, we need more money to save this thing."
Yeah.
So, that's another option. But I mean,
Yeah,
After
it is.
someone just told you lost 100,000 of their money, are you really going to give them another 50,000 to save
Well,
it? I don't
yeah. So
know.
it doesn't. I'll tell you. So it doesn't quite work like that. But a good point. So what happens is you go to the investors and say, hey guys, this is what's going on. These are the circumstances we're under, um, and we have options. We walk away. Everybody loses money, us included, or we've talked to the lender. And if we put in some more money, they'll let us restructure the loan, for example. So we can get out of variable rate debt, we can get into fixed rate debt. We can defer interest. Um, we can bring in somebody else to infuse some more capital into it, because sometimes it's just a matter of like, we need working capital for a short period of time.
Hmm.
And that's where it goes to the experience of the general partnership team. Because if you're brand new, like, and myself included, I was new at one point, and there's people who know more than me, but when you have some of that experience, that like your best shot is to pick up the phone and talk to the lender, because you have an account manager and you pick up the phone and you're like, hey bro, this is what's going on, this is where we're at, we've talked to our investors, we manage expectations, we can raise this much capital, will you work with us?
Hmm.
That is a very powerful conversation. But if you don't know what to say in that conversation, then you don't know, because the lender's not in a position to tell you exactly what to do. They don't want the liability. So working with a general partner who has some experience, has a track record, will continue to fight through whatever storm is huge, as opposed to someone who's like, yeah, I'm brand new. It's all rainbows and unicorns. This is all going to be great, because there are rainy days.
Yeah.
And sometimes, like recently, it's been like rainy years. That's just kind of where the market cycle is at. So
Hmm.
there is risk. And that's a lot of things. What I've learned this last few years is, how do you manage that? When you underwrite a deal, and it's really all about variables. So think of like an Excel workbook, and there's a bunch of math in there, and in there it's all variables. And your job as an underwriter and operator is to control those variables as much as possible. So any place you leave an open-ended variable, that's where you expose yourself for risk. And so what you learn to do is, how much risk is there here? I need to have more control on it. How much risk is there here? I don't need to have that much control on it. And that's a very high level, but everything you're doing here is a variable. And when you put your business plan together, honestly, it's your best idea of what might happen over the next 5 years. But
Hmm.
then you've got to do your best to make it happen. And like I said, whatever headwinds come your way.
Awesome. Thank you for sharing, both the good sides and the bad sides, because it is really important for people to understand. And kind of like you mentioned before, it's really important for people to know and trust the people that they're investing their money with, right? It's probably not the best idea to invest with someone completely new, like you said, because maybe they don't know what the market conditions could really mess up all their projected returns. Again, thank you for kind of talking us through both the very good side and the very bad side of apartment investing. I think it's really important. Kind of switching gears here a little bit, there was another part I wanted to kind of talk to you about. I wanted to kind of talk a little bit about systems and automations, and because you had said you had worked for an IT company for many years, and I want to see if there was any ideas, systems, or processes that you learned from software and IT and use in your real estate investing business.
Yeah, yeah. I use more of it in my coaching business than my real estate investing business, but I handle a lot of the back end stuff. And so where I can, I'll build systems, and I like Monday.com for like project management, for example. It's very
Mm-hmm.
flexible. So we'll build that. But within that, there's some automation that you can do. So think of it kind of like project management. We'll build because of like standard, we use like standard operating procedures. So one of the things that I've really focused on is those standard operating procedures and building documentation for that and checklists. So when it comes to underwriting, I have a very detailed underwriting process. And I turn that whole thing into an underwriting checklist, step by step by step by step. And then hired somebody and said, follow my exact process, step by step by step by step by step. And so for me as an operator, what that did is it freed up my time from going and finding all these deals and underwriting all these deals, because they can go reach out to brokers, they can do that initial conversation, and then they can follow that exact process. Now what we're starting to look into is using like AI to what can we automate there, and we're just starting to scratch the surface on that, which is really fun, because what you're able to do now is give AI a task and say, I need you to go do this task. So if you can define a set of parameters, then you can work with AI and say, follow these steps, and then you can train it and you can tune it. So while I haven't implemented it yet, one of the things we want to work on is, every day we get deal flow from brokers. So one of the things we're working on is an AI agent that will see that email, go access that information, bring that in, evaluate it, do an initial underwriting of a deal, and then basically at the end of every day, it'll give me, hey, these 5 deals came from brokers. This is what the initial underwriting looks like. So that'll happen during the day while I'm doing other things. I'll have AI agents that are out there doing that type of work for me, which is pretty cool. Now, there's a lot to build out in that, but that's where I'm taking like the IT background and the operations and folding that into how can I be a better owner and operator. So that's where, like I said, that's where we're spending a lot of our time now, is learning the AI, agentic AI piece of it to handle that. So there's still a real human component. Like there's a lot of things you can't replace. I have to have a real conversation with property management company. I got to have a real conversation with a broker.
For now.
For now. For now, I do.
Give it a year.
Yeah. We'll come back to the conversation here, but
let's have a follow-up show in a year and see who's talking to who.
Oh, dude, it's crazy. I've seen a lot of that stuff, but so with all the AI stuff, my goal is to, as new stuff's coming out, like play with it, learn from it, because if I can just kind of sort of keep up, like it's already moving me forward in a lot of ways. And even ChatGPT, we use it all the time. And so even for passive investors and building investor profiles, we can leverage AI to score a potential investor before we ever have a conversation with them, because people have so much information out there on the internet that we're now able to leverage that and say, here's this person, go find out information about them, give me a score, and give me this information before I ever talk to them.
Yeah.
And so there's a lot of automation there. And then operationally, my one of the things I really enjoyed in corporate America was, towards the tail end of it, was the leadership part of it. So, and that's fun. Like, I've got a couple VAs that work for me, and I'll be probably hiring a couple more, but I really like teaching people, leading people, and seeing their growth there. So I do take a lot of my background and fold it into what's going on. I definitely don't want to hang up my IT background or my operational background. I just leverage it as much as I can. And what's really cool about it is I just do what I want. Like, that's what's fun about it, is I want to play around with it, and I just play around with it. I that's the beauty of, being your own boss at this point. Like,
Mm-hmm.
you want to go spend some time figuring this stuff out? Do it. It's fun. You want to have someone on your team try to figure it out? Do it. It's fun. And so that's another thing is big for me with my team is I give them space. I give them a lot of space. Um, Here's what I need done. I don't care how you do it. If you're not happy with the results, do it again. I'm not going to get mad at you. Figure it out. Just do it to the best of your ability. And if you get stuck, talk to me. We'll work through it. So, um, yeah, we could talk about leadership and all that stuff for a long time, but yeah, that's how I fold it all in because I work with people, manage people, like to leverage technology in all of that, and I like to build systems that go along with it, as many systems as I can to make it repeatable and streamline it and do more with less.
Yeah, I really like that you're trying to use as much AI as possible, but still have the human touch. I really like that. I think it's important for a lot of people to stay ahead of the curve as much as they can with AI because we already know that the genie's already out of the lamp. Like AI is coming, AI is gonna do a lot of stuff for us. So it's really a good idea to stay ahead of it and try not to just get left behind. I don't know if you're comfortable kind of talking about some of the behind the scenes stuff, but I know like for me and my company, I'm trying to use Chat GTP Premium, which is actually has an operator on it. Have you used anything? Again, if you feel like talking about it, what kind of stuff are you using for like the bots or like communication or doing those tasks that you were talking about?
So we have we have a team account. So a lot of what we do is custom GPTs. So repetitive tasks that we're doing.
Mm-hmm.
So email automations is an
Okay.
example. We'll build a custom GPT that does that. We leverage AI a lot for social media in multiple levels. It'll create carousel content extremely rapidly, single image stuff extremely rapidly. But I don't like for me on social media, um, I don't really like, sitting in front of a camera and doing that kind of a thing. But what I do enjoy is, more of like a YouTube format. So what we'll do is we'll do a longer recording and then we leverage Opus Clip to
Mm-hmm.
chop things up. And so you can go in there and tweak that a little bit. CapCut is another tool we use, and it has some AI in it that'll also do things for you. So a lot of the like video editing is honestly done through AI. The captioning is all done through AI. Um, Zapier, I think it's Zapier. It's either Zapier or Zapier, but I
Mm-hmm.
think it's Zapier. So that's where I started playing with the AI agents and chatbots. They have some tools. They're in beta right now, and the chatbot. And I just put one together the other day. It was just what would happen, and I called it passive investor concierge bot.
Mm-hmm.
And I run a free school community, and I said, hey guys, I created this bot, let me know your thoughts. What was really cool is I could see every conversation that it had had and all of the keywords. So I gave it some parameters. I said, here's what I want you to do. So somebody's going to come to you, they're going to ask questions about passive investing. Here's your boundaries. Here's what you can answer. And you can feed it. So you can feed it like information. And when I say feed it, you give it like resources it can reference. So it could be documentation that says, this is how to get a hold of me. These are some past deals we've done. Here's some case studies. So you give it this world to live in.
Mm-hmm.
But then what happens is, like, I went into it the other day and I can literally see the conversation. I can see what somebody's asking. I can see what the keywords are. So then what I can do is I can go in and say, okay, let me tune you a little bit more because I see they're asking these questions. I wasn't aware of that. Let me feed you some more information. So honestly, to get to the point to where by the time I have a conversation, somebody has already experienced me for hours before I ever have a conversation with them. So that's a lot of how I'm leveraging AI is giving it my tone and my voice to get someone to experience me before I ever meet that person. And that's a big deal. That's a really, really, really big deal. because you're building trust. And I probably shouldn't be sharing this, the potential passive investors, um, but that's really cool. And then that's just an AI bot. And then the AI agent, we're looking at a tool. It's called N8N, and that
Mm-hmm.
might be a tool that could do the underwriting for
Yeah.
us. It would say, "Here's an email. I got it. I'm going to go access the broker's deal room. I'm going to download this information. I now know how to parse this information. I know
Mm-hmm.
what to do with it. I can give you some of these initial results, and then I can score these things. I can give you a summary at the end of the day." So,
Yeah.
so ChatGPT, we use the Teams account. I haven't used the operator thing yet. I've seen it available. They have Codex in there. We do use Sora. I think it's called Sora, and that's just image video generation.
Mm-hmm.
Um, yeah, I like. So there's a whole bunch of other AI tools that are out there. I haven't touched all of them
Yeah.
yet.
Yeah. There's so
Um,
many.
yeah, what are you using?
So I'm kind of messing around with this premium account. It is a little expensive. It's 200 a month for ChatGTP premium, but it has this operator, and it's really cool because what it does is you kind of use it like normal AI, and you're like, hey, I'm trying to have this done, and what it does is it pops up this browser that it literally can like go and click and like type in stuff on your behalf. So I can get it to log into some of my accounts. I can get it to go literally log into my email, find all the emails from that person, and like I said, it's clicking on a browser. It's typing in fields. It's pretty mind blowing, really, of what it can do. And like when you first start a task, it's kind of slow and it kind of asks, "Hey, am I doing this right?" and all this stuff, right? So you kind of like, "Yeah, keep going." Like, "Yeah, you're doing good." Maybe move faster. And so it just kind of like learns, and like as it goes it gets smarter, and it's really weird. It in my other jobs, I've trained people, right? And you can kind of see people, maybe if they're unfamiliar with it, they're kind of slow and they're not sure. And so like this AI operator is very similar to that, and to where it's like, I don't really know this yet, and then after like 15-20 minutes, this thing is just zooming around, and you're like, dang, you learned that super quick. And so it's really cool. And then you'd also mentioned N8N. There's another one very similar to that I'm also messing around with. It's called Gumloop, and it's kind of that same low code, no code. For our listeners, low code, no code is like there's a little bit of coding, but not really. You're more so like setting up like diagrams and workflows. It's more of like a graphic user interface, more so than just like writing a bunch of code. So this gun loop is very similar to N8N, to where you're like, okay, go to my email and any email from this person, then send it to here, and you just create these workflows, and like it basically just does all this stuff instantly and very quickly. So if you're trying N8N, I also encourage you to check out Gumloop. That's a pretty cool software as well. There's just so much to it. Those are some of the ones that I'm using. It kind of leads me to a good book here, if I can grab a book real quick. This is one that I've been checking out recently. It's pretty good. New Automation Mindset. Pretty good book here. And speaking of books, each week we do a free book giveaway. This is for all the listeners and viewers of the show.
Right.
Each week we give away books, so all the listeners have to do is like the episode and comment which book they'd like to have. So we have books such as Leaders Eat Last, E-Myth, Outliers, The One Thing, 10X Rule, Cash Flow Quadrant. So if anyone's listening and wants to enter to win, just like and comment which book you'd like to have. And 7 days after the air date, we will send you a copy if you win.
That's awesome. I might have to like and comment.
Yeah. I'm sure you've read a couple of those already.
Yeah, I right now there's a book I'm stuck on. Well, I shouldn't say stuck on. I'm like reading it the fourth or fifth time, and it's called Expert Secrets by Russell Brunson.
Okay.
So
Yeah,
it
that's a
is.
great one.
Have you read that one?
I've gotten through probably the first half of it, but I haven't gone through everything. But
I have it on
Now that you
audio.
mentioned that, I kind
I
of
have it on
noticed,
PDF.
I noticed that you use a lot of the stuff that he talks about in the book.
Yeah, 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 yeah.
Frequent
Pay
weekly
attention.
webinars and just kind of like bringing in new people as much as possible. So that's really cool that you're implementing a lot of the stuff from that book. If there's something else you want to mention about that, go for it.
No, my journey as a real estate entrepreneur investor, it may be a lot different than a lot of other people's. Maybe the same, maybe a little bit different. I am choosing a path right now with a lot more visibility to it. There was a while where I just didn't want the visibility. I didn't want to be seen. I didn't want my voice to be heard. I can't tell you what it was, but now I'm in a different spot. I want to share my knowledge. I want to share this information with people.
Hmm.
And how do you do that? You have to get your voice out there. So I have, spent time, reading a lot of Alex Hormozy stuff,
Hmm.
Russell Brunson. So I've really been learning a lot over the past few years, more on the marketing side. And I've been getting coaching more on the marketing side. And so that's where I, refer more to Russell Brunson. And it helps me also be a better communicator. Back to way back when I wanted to be a bartender. So at that time, um, I one of the books I read was I think it's Dale Carnegie, How to Win Friends and Influence People.
Hmm.
Um, and I think about it every day, like all the time. That I've read that book multiple times, listened to it multiple times. There's another book I read around that same time frame called it was like How to Flirt with Anyone, Anywhere, Anytime, Any Place. It was before I was single. Don't tell my wife, but it was all about these social skills and understanding people better. And that's where I like a lot of the Alex Hormozy type stuff, or Russell Brunson. Um, but it helps me be a better communicator. It helps me connect with people because at the end of the day, Ian, what are we trying to do? We're trying to change people's lives.
Hmm.
And like, to me, that's a life well lived, is when you have the ability to change somebody's life and you take action on it. And if I've learned something and I can help somebody out and it will have an impact, like, I want to do that. But there's no way for me to get my message out if I just sit on my hands. So that's the reason why I read a lot of those books, is because it helps me get my message out, because I truly have the ability to change somebody's life, hopefully for the better, but right, for the better. I have the ability to do that, and that's what's really cool about the journey that I'm on. And while we're in it, a big push to like just get me out and doing this full time was, I got little kids. I want to set a great example for them. I want them to realize they don't have to go down a very specific path. They can choose their own path, and they should be able to do that and not have any regrets, and look back and say, you know what, I did it. It was hard, but I had a good role model that gave me the support to get me there. So I put myself in difficult situations on purpose so that I can set a good example for other people.
Wow, that's great. I'm so glad that you shared that with us and the listeners. It's very inspiring for us. And just kind of wrap things up, Stephen's story reminds us that success in real estate isn't just about the units, it's about building a life with intention. When you own your own income, you own your own time. And when you own your own time, you own your own choices. If you're still feeling stuck in a job you hate or chasing random deals, get focused, get educated, and take control. Thank you for tuning in, everybody, and thanks for joining us. We'll see you next time. Thanks, Stephen.
Absolutely, man. Thank you.